Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's get straight into it. First of all, based on the monthly statistics, the average time window has now been reached. While an SFP of the lows wouldn't be a problem, a close below that level could lead to more downside and fulfill the average time window for downtrends. Naturally, that could mean lower prices, especially if the HTF level, mainly the weekly order block, gets lost. An early sign of potential local downside would be losing the current local SR level we're holding. You can clearly see it's an SR level when extending it to the left. Losing that would open the door to the 98K low, which means for now, I'm observing whether this level holds as support until it doesn't. Personally, I don't front-run candle closes, so I still treat this area as support, aiming for higher prices, mainly based on the idea that if the low is in, according to average time data, then the next monthly high window should come next. For the local level, an SFP of this support would be fine. That would also align with our weekend lows and today's average loss level. So seeing a wick into that area would be totally fine. What's not preferred would be a daily close below that level. That would open the doors toward the lows again. From there, we'd either look for an SFP and reclaim, or price simply fails at the same level and continues lower. Now, switching to the weekly chart, we can see the weekly EMA and the Bollinger Bands. Historically, they have a very strong bounce rate, over 80%. That means, more often than not, when price touches the lower band, we see a bounce, and only 3 times it failed. If I remove all setups below the weekly EMA, we can see that while some good trades get filtered out, all the losing setups are also filtered out. That means there has never been a failed bounce when Bitcoin touched the Bollinger Band above the weekly EMA. So for me, that's a long-term reliable setup, something that's worked consistently, and I can't assume it suddenly stops working until we actually see it fail. Here's how I think about it. If I were, for example, in 2021, and I saw this setup, price above the weekly EMA, touching the Bollinger Band, and I thought, well, maybe it won't work this time, but then it worked out, that would be frustrating. If the next time I thought, this time is different, and again it worked, and the same thing happens multiple times, then expecting failure every time it succeeds would just be irrational. So my approach is simple. I trade what I see. If price touches the Bollinger Band above the weekly EMA, I'll take the setup. If I'm wrong, then I'll know something has changed. But until I actually see that happen, I have no reason to assume failure. I stay prepared through risk management, but I don't expect a loss unless data proves it. I know this mindset isn't for everyone, but this is what works for me. Now let's add one more piece, the weekly momentum. Every historical setup formed when momentum was below 50%, usually either bouncing from there or bottoming near 20%. By the way, all previous setups also came from bearish divergences on the weekly time frame, exactly what we're seeing now. So yes, price could make another wick below the previous low, or it could hold here and follow the same pattern we've seen many times before, either a direct move up or a short range first and then a move up. However, to be fair, momentum is still diving, so unless it reverses quickly, we might see a few weeks of ranging before it fully resets. If this setup fails, then it'll be the first time in a long while, and I'll simply log it in my journal and update my stats. Now, moving to the 7-day chart, the EMA crosses. Based on history, every time we've had a cross, price revisited the lower EMA. So far, this setup has the same success rate as the weekly EMA plus Bollinger Band combo. That means I'm also expecting that level to be touched sooner or later. It currently sits around 99.2K, but of course, it moves slightly with each new close. I've also checked the retracements and timing after those crosses. On average, retracements were around 20%, give or take, and in this bull run, about 10% from the cross to the local low. Let's see where that would put us price-wise next, and how it aligns with the current levels we're watching. A 20% move would bring BTC significantly lower. That would be around mid-80s. and a 10% move would be mid or low 90s. That doesn't need to happen, and the reason I will explain soon. But first, we look also at the bounces after the low was made. I just took the minimum for now on the chart and not the average, and that would be around a 40% bounce, while a lot of moves made way more percent gain on the rise, up to 100% plus. So if we take this percent bounce from the levels, we would see that a bounce from the extreme low would bring Bitcoin back to around 160K. A bounce from the 10% move lower would bring BTC back to new all-time highs. And if price just touches the level slightly again, or SFPs it and has a bounce, that would bring Bitcoin to around 130K plus, based on those stats. Now, we need to keep in mind that most of the time, this move down happens within the first week, up to 3 candles, which is basically 2 weeks up to 21 days. That would be basically by the end of November. So if price breaks the lower support level I was talking about, then these stats get relevant for a move lower, but also for the monthly timing, as there we would see a move down into the average time for downtrends. For now, price passed one period, meaning one candle. So technically we would expect it to touch at least this EMA within the next 2 candles on the 7-day time frame. And here, I want to add the chart from before, mainly the Bollinger Bands. Here, I also marked out the EMA crosses, and while we saw on the EMA cross the bigger percent moves down, on the Bollinger Bands, it was basically the lower bands that got touched. Here, I also looked at the deviations below the lower Bollinger Band in these situations, and usually we see an average move around 4 to 5% below the Bollinger Bands. Currently, we already had almost a 6% move lower. So what I wanted to say is that while on the EMA stats, we could have this lower level like 10% or 20% lower after the cross, the lows there were always the bottom of the Bollinger Bands, which only had a deviation of around 5% on average, with a maximum around 11%. And currently, we already touched the Bollinger Band on the weekly time frame. So the deviation already happened, and now only the bearish EMA target needs to be fulfilled, but potentially, with this logic, not 20% lower because it already touched the bands. You can, of course, have a different logic to this, and if yes, let me know. Maybe I see something wrong or I'm missing something. But for now, if you look just based on what I showed and said, would you go against it? Me personally, not. And I'm fine to be wrong, of course, but as it stands now, that's what I see here on the chart. You can make your own conclusion, as my bias doesn't need to be the same as yours, but I can't lie to my eyes and ignore all these things. Simple as that. So that means, as it stands now, this is support with the confluences I just mentioned. If the opposite happens, then I will adjust it in my stats and journal and mark it as a losing trade, of course. Now we have a look at the last chart before moving to local levels. That's the daily cycle chart here, and we were looking for a buy signal to appear, mainly 4 signals in the best case. For now, we saw 1 buy signal and already a nice rise, then the next 2 buy signals and a smaller rise. So technically, we could expect another one. It's not a rule, of course, but usually we saw 4. For now, that would mean price could test the level at 101 to 102K, close positive, and print a buy signal. That would also be our weekend lows. It doesn't have to happen now, but technically that's something to keep in mind. 3 buy signals are not bad either. That means price has already reached the daily cycle and is ready for a bounce. If we switch to the 2-day chart, we can see it worked in the past as well. There, we can see it had 3 signals and the last time 1 buy signal. And for now, it printed another buy signal again. So given the facts I showed previously, the support level on the higher time frame, the weekly cycle, the weekly EMA, and the Bollinger Bands being touched, now we also get these buy signals. For me personally, that's already a lot of reasons to hold my long. I personally have more reason to be in a long than in a short. And yes, I can be wrong and it will be a losing one, but until that happens, I'll follow these simple stats shown here on the chart. Now let's switch to the local levels. Here we can see price so far holding support. First of all, we formed the Monday range here, and on the next day we got an SFP of the high, and price started retracing down while breaking the Monday range. We had a lower level for that situation, mainly the daily SR level. That's where I said, For now, this is a potential higher low area until proven otherwise, and that would be, as mentioned before, a daily close below that level. Simple as that. If a level is on the daily chart, then I need a daily candle to confirm the break below or above that level. For now, we see a nice bounce from that area back inside the Monday range. In the best case, price closes inside the Monday range, and then we can target the high of this range. At the same time, this is now an SR flip level, so I'm sure people are looking here for shorts, and that's fine, of course. For me personally, I don't want to short into the bigger support area we're currently in. Yes, it may offer some nice local moves, but I'm more interested in longs from the support area. So with that said, if you're looking for shorts, then you'd want to see this level lost again. I'm personally not trading that. I'm staying in my long and targeting at least 112K, and if it moves lower, I'll add to the position. Now, switching to the local setups that I showed yesterday in the Patreon group. The first one was based on the Monday low SFP. That would be an aggressive entry, and of course with reduced size, as the invalidation can be local. That means it needs to be at least either below the overall low or even lower, based on a time-based invalidation, meaning a daily close below the SR level. The second one was based on the lower level, either an aggressive entry on that level or a reclaim of the Monday range with a structure break. Both would be in profit now, so if someone is in the trade, they need to watch whether price is able to hold the Monday low or not. It's always best to secure some profits. For now, technically, I would look if this level can hold. Wicks are fine. And if it closes a 12-hourly or daily candle inside the Monday range, then I would target higher. For today, the average gain stat sits exactly at the mid-Monday range, so that's the local resistance, and only if it breaks, we can expect higher prices. For the average loss level, that would basically mean a new daily low and an SFP of the weekend lows. For now, price broke back inside the Monday range, so I can't really target the average loss level, but that's where it would most likely come if price moves below VWAP and basically the open range for today. If price starts to close a 1 hour or 4 hour candle below that, then I would expect the lower level to be hit. Until then, the reaction needs to be watched on the back test of the level. For signs of strength, it needs to hold. For weakness, the area needs to be lost. So to wrap it up, for me, I stay in my other trade. These were 2 potential trades that I shared. If you want these updates, you can join the Patreon, where you also get my journal and one of my strategies. Anyway, for now, if someone is in this trade, pay yourself and manage the trade wisely. Until then, stay safe and see you in the next one.